Hi everyone, today we'll be going over accounts October-November 2021, paper 3-1, question number 6. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 6 is a part of section B, which relates to cost and management accounting. So without any further delay, let's get started. W Limited started business on 1st January 2021. It manufactures one product in two sizes, small and large. It sets its selling price at total cost plus a markup of 50%. And it also provided the following information for January 2021. So we are producing the same product but in two sizes, small and large. And the production units for small sizes are 5,000, whereas the production units for large sizes is 1,000. And the direct material per unit, a small product will require 0.5 kilo per unit, whereas a large product will require 2 kilos per unit, and the direct materials cost is $10 per kilo. Similarly, direct labor per unit, 15 minutes of direct labor is required in order to produce 1 unit of small size, whereas 45 minutes of direct labor is required in order to produce 1 unit of large size. And the labor rate is $8 per hour. Then production overheads amounted to 30,000 and selling and administrative costs to 24,000 for the month. These fixed costs were absorbed on a per unit basis. Alright, let's have a look at the first question. We need to prepare a statement showing the production cost and the selling price of 1 unit for each size of the product. Okay, let's first figure out the direct material cost per unit for small and large sizes and the direct labor per unit cost for the same. So let's have a look at the small size. The direct material per unit required is 0.5 kilos at the rate of $10 per kilo, which means that the direct material per unit for small is just going to be 0.5 times 10, which is going to be $5. Let's repeat the same process for large sizes. So the direct material required is 2 kilos and the rate is again the same, $10. So we are just going to multiply 2 with the rate of 10, which gives our direct material per unit cost for the large sizes to be 20. Now we will repeat the same process for direct labor per unit. So we know that we require 15 minutes of labor for manufacturing 1 unit of small size. And the rate is $8 per hour. So we can just convert our 15 minutes into an hour. So that's just going to be 15 by 60 because 1 hour consists of 60 minutes. Then we can multiply it with the rate of $8 per hour. So this gives our direct labor rate in order to manufacture 1 unit of small sizes to be 2. Let's repeat the same process for large sizes. We require 45 minutes of direct labor. Let's convert it into hours. So that's just going to be 45 by 60. Now we can multiply it with our direct labor rate of $8 per hour. Now this gives the direct labor cost required in order to produce 1 unit of large sizes to be $6. Okay, let's enter our direct material rates per unit and the direct labor rates per unit for both small and large sizes in order to show our production cost as well as the selling price. So we can start with our direct material. We figured out the direct material cost for small unit to be 5 and large unit to be 20. Now we can move towards direct labor. We figured our direct labor cost for small sizes to be 2 and large sizes to be 6. Now in the given information, the direct material and direct labor are the only direct costs, so we can just figure out our total direct costs. So that's 5 plus 2 for small, which gives us 7, and for large, that's going to be 20 plus 6, which is 26. Now we can just divide our production overheads. Let's do that. Let's have a look at the above given information. We are told that the production overheads amounted to 30,000 for this month, and this cost was absorbed on a per unit basis. So let's figure out our total units. The number of units for small sizes are 5,000, and the number of units for large sizes are 1,000. So this gives our total units to be 6,000. Now we just have to divide our production overheads of 30,000 among these 6,000 units. So the per unit production overhead is just going to be 30,000 divided by 6,000, which is $5. Let's enter this into our production cost statement. So that's going to be $5 for small and $5 for large. Now, if we add our total direct cost to our production overheads, we can get the production cost per unit. Let's figure that one out. Okay, for small, that's just going to be 7 plus 5, which is 12. And for large, that's going to be 26 plus 5, which is going to be 31. Now we need to divide our selling and administrative overheads as well. Let's write it down. Let's have a look at the given information. So we are told that the selling and administrative cost is 24,000 for this month. And this should also be absorbed on a per unit basis. So we already figured out our total units to be 6,000. Now we just need to divide our selling and administrative cost of 24,000 among these 6,000 units. So the per unit selling and administrative cost is just going to be 24,000 divided by the total number of units, which is 6,000, which gives our per unit selling and administrative overhead to be $4. Let's enter this into our statement. That's $4, $4. Now, as we can see, we have already distributed all of the costs. Now, if we add our production cost per unit to our selling and administrative overheads, we can easily figure out the total cost per unit. So for small sizes, that's just going to be 12 plus 4, which is 16. And for large sizes, that's just going to be 31 plus 4, which is 35. So this is the total cost per unit. Now we are also required to figure out the selling price per unit. In order to do so, we need to have information regarding the markup. Let's have a look at the above information. So we are told that the selling prices is the total cost plus a markup of 50%, which means that our profit is just 50% of total cost. So let's figure out the profit first. Okay, profit is just 50%, right? Now let's figure out the profit for small sizes. That's just going to be 16, which is the total cost, multiplied with 50%, which you can write down as 0.50. So this gives the profit for small sizes to be $8. Let's write it down. We repeat the same process for large sizes. We can see that the total cost for large sizes is 35, and if we multiply it with 50%, which we can write down as 0.50, this gives a total profit for large sizes per unit to be 17.5. Let's enter it as well. Now we can easily figure out the selling price per unit by adding our total cost per unit to the profit. For small sizes, that's just going to be 16 plus 8, which is 24. And for large sizes, that's going to be 35 plus 17.5, which is 52.5. So this concludes the first part of this question. Now we can move to the second one. We are given additional information. An analysis of the monthly production overheads showed the following. The machine setups cost 10,200, order processing cost 12,600, and quality inspections cost 7,200. So this is the total of the production overheads divided among the headings of machine setups, order processing, and quality inspection. And these activities took place as follows. So this is the division of those three activities, right? For small, that's 72 times. For large, that's 30 times for machine setups. And for order processing, it was done 120 times for small sizes, whereas it was done 60 times for large sizes. And quality inspection were done 12 times for both small as well as large sizes. Now let's have a look at our question. We need to prepare a revised statement showing the production cost and the selling price of one unit for each size of product using the activity information, which means that we now need to divide our production overheads based on those three activities mentioned above, which were machine setups, order processing, and quality inspection. Again, we are preparing this statement, so we will start with our direct costs, and there are to be no changes to those direct costs, right? So we can just write our total direct costs. We already figured it out in our first part, so let's have a look. The total direct cost for small sizes was 7 and for large it was 26. So let's write it down. Now we need to divide our production overheads. So let's have a look at the above information. For the first one, we have machine setups. So machine setups were done 72 times for small sizes and 30 times for the large sizes. Let's figure out the total times the machine was set up. So that's just going to be 72 plus 30, which is 102. So out of 102 machine setups, 72 were for small sizes, whereas 30 were for large sizes. Now we will divide this amount of 10,200 on this particular basis. Okay, so for small, that's just going to be the total cost, which is 10,200. And we know that for small sizes, out of 102 machine setups, 72 were done for it. So we can just multiply it with 72 by 102, which results in the total machine setups for small sizes to be 7,200. Now for large sizes, we repeat the same process. So the total cost is 10,200. And out of 102 machine setups, 30 were done for it. So that's 30 by 102, which results in the total machine setup cost for large sizes to be 3,000. So again, this is the total cost, right? Total cost means that for small sizes, this is the total cost for 5,000 units, because this is the number of units that we were given in the above information. And for the large sizes, that's going to be for 1,000 units. But in our statement below, we only record our per unit cost. So let's figure out the per unit costs. We can just divide the total cost by our units. So for small sizes, that's just going to be 7,200 divided by 5,000, which gives 1.44. And for large sizes, that's total cost 3,000 divided by total number of units 1,000, which gives 3. So we will enter these two amounts in our statement under the heading of machine setups. Let's do that. So it's machine setups. For small, that's 1.44. For large, that's 3. Now we repeat the same process for order processing as well. Let's figure out the total times the order were processed. So that's just going to be 120 plus 60, which is 180. So out of 180 order processed, 120 were done for small sizes, whereas 60 were done for large sizes. So let's allocate the total cost of order processing of 12,600 on this particular basis. For small sizes, that's just going to be the total cost of 12,600 times 120 by 180, because 120 order were processed for small out of the total order processed of 180. This results in the total order processing cost for small sizes to be 8,400. Let's repeat the same process for large ones. So the total cost is 12,600 times 60 by 180, because 60 orders were processed for large units out of the total order processed of 180. So this results in the total order processing cost of 4,200. Again, this relates to the total unit of 5,000 for small and 1,000 for large, and we only enter our per unit cost. So let's figure out our per unit by dividing the total cost by their respective total units. For small, the total cost is 8,400 divided by the total units of 5,000. So this results in the per unit cost of 1.68. For large, the total cost is 4,200 and the total number of units is 1,000. So this results in the per unit cost of 4.20. Let's record these two amounts in our statement under the heading of order processing. So for small, that was 1.68, and for large, it was 4.20. Now we again need to repeat the same process for quality inspections. We can see that the quality inspections were done the same amount of times for both the large sizes as well as the small sizes, which means that the total cost of the quality inspection amounting to 7,200 can be divided equally among the small as well as large sizes. So small and large, that's just going to be 7,200 divided by 2, which is 3,600. So this is the total quality inspections cost for both the small as well as large sizes. Now we require the per unit cost. For small, that's just going to be the total cost of 3,600 divided by the total number of small units, which is 5,000. This results in the per unit cost of 0.72. Whereas for large, the total cost is 3600 and the total number of units is 1000. So this results in the per unit cost of 3.60. Now we will record these two amounts in our statement under the heading of quality inspections. Let's do that. Quality inspections, and it is 0.72 for small and 3.60 for large. Okay, now if we are to add our direct cost to our production overheads, we can figure out our total production cost per unit. Okay, so this is just the sum of these four amounts. So that's 7 plus 1.44 plus 1.68 plus 0.72, which results in 10.84. For large, that's the sum of these four amounts. So that's 26 plus 3 plus 4.20 plus 3.60, which results in 36.80. Now we again have to divide our selling and administrative overheads. What we know is that the basis of allocation for selling and administrative overheads has not changed. So we can just put the same amount that we figured out in the first part. Let's have a look above. The selling and administrative overheads for small as well as large sizes were 4. So let's write it down. That's 4 and 4. Now we can add the production cost per unit to our selling and administrative overheads in order to figure out the total cost per unit. For small sizes, that's just going to be 10.84 plus 4, which is 14.84. And for large sizes, that's going to be 36.80 plus 4, which is 40.80. Now we just have to add our profit, and profit or the markup remains the same, which is at 50%. For small sizes, the total cost is 14.84, and if we are to figure out the profit, we need to multiply it with the 50%, which we can write down as 0.50. This results in the profit per unit for small sizes to be 7.42. Let's repeat the same process for large sizes. So the total cost per unit for large is 40.80, and in order to figure out the profit, we need to multiply it with 50%, which is 0.50. This gives our profit per unit for large sizes to be 20.40. Let's write it down. Now we have to add our total cost per unit to the profit per unit in order to figure out our selling price per unit. For small sizes, that's just going to be 14.84 plus 7.42, which results in 22.26. And for large sizes, that's going to be 40.80 plus 20.40, which results in 61.20. Okay, so this concludes this statement as well as the second part of this question. Now we can move to the third one. We are given additional information. On 31st January 2021, it was established that 400 units of the small product and 200 units of the large product remained unsold. There was no work in progress. Okay, so what we know is that for small units, we had the total units of 5,000. And out of these 5,000, 400 units remained unsold, which means that 400 will be the closing inventory. Then if out of 5,000, 400 still remain with us, it means that the remaining amount were sold. So the remaining amount is just going to be 5,000 minus 400, which is 4,600. So the amount of small sizes sold were 4,600. Let's repeat the same process for large sizes. For large, the total units were 1,000. And out of 1,000, 200 units still remained unsold, which means that the 200 units is going to be the closing inventory. So the remaining units must have been sold. So that's 1,000 minus 200, which is 800. So 800 of the large units were sold. The profit for January 2021 using absorption costing was calculated at 48,400. Now let's have a look at our question. We need to calculate the profit which would have been earned if the selling prices had been amended to account for the levels of activity which took place. Alright, so what this means is that we're given the profit already using absorption costing calculated at 48,400. So this actually used our selling price per unit that we figured out in the first part of this question. And now what the question requires is to figure out the profit which we would have made if we used the selling prices that we figured out in the second part of this question. Okay, so we will go with the format of an income statement. And firstly, we will record our sales revenue. Okay, so what we know is that for small sizes, we sold 4,600 units, and for large sizes, we sold 800 units. So we just need to multiply the per unit selling price to these units sold in order to figure out the total sales revenue. Let's have a look above. So the selling price per unit for small sizes was 22.26, whereas for large sizes, it was 61.20. So we just multiply it with the number of units sold for those particular sizes in order to figure out our total sales revenue. Let's do that. For small units, the total units sold was 4,600 and the selling price per unit is 22.26. Plus, for the large units, the total units sold is 800 and the selling price per unit is 61.20. Okay, so the sales revenue is just going to be 46,000 times 22.26 plus 800 times 61.20, which results in 151,356. Now, like I said before, we're going with the format of an income statement. So nextly, we will subtract our cost of sales. The first item included in the cost of sales is opening inventory, right? So let's have a look at the above information. Alright, so there is no opening inventory because W Limited actually started business on 1st January 2021. So this is the first year of operation, which means that there is no opening inventory. So we can directly jump to our production costs. Okay, so normally we would have recorded purchases, but since we're manufacturing our own goods, we will be recording the production costs. And we know that we are manufacturing 5,000 units for small sizes and 1,000 units for large sizes, right? So 5,000 for small, 1,000 for large. So we just need to multiply it with the respective production cost per unit that we figured it out in the second part. Let's have a look there. So the production cost per unit for small sizes is 10.84 and the same for large sizes is 36.80. So we just multiply it with the respective total units produced, which is 5,000 and 1,000, which you already recorded. Let's do that. 5,000 times the production cost per unit for small sizes, which was 10.84, plus 1,000 times the production cost per unit for large sizes, which was 36.80. So the total production cost is 5,000 times 10.84 plus 1,000 times 36.80, which results in 91,000. Okay, lastly, we subtract our closing inventories. Okay, so let's have a look above. We already figured out the closing inventories for small sizes to be 400 units and large sizes to be 200 units. So in order to figure out the total closing inventory value, we just need to multiply our closing inventories with the production cost per unit. Let's do that. So closing inventory is going to be 400 units for small sizes and the production cost per unit is 10.84. So we can just multiply it with that. Plus, for large sizes, the closing inventory is 200 and we are going to multiply it with the production cost again, which is 36.80. Okay, this gives our closing inventory to be 400 times 10.84 plus 200 times 36.80, which results in 11,696, which needs to be subtracted. So I'm just going to put it in a bracket. Now we can figure out our total cost of sales by adding these two amounts. So that's just going to be 91,000 minus 11,696, which results in 79,304. Okay, now we need to deduct this in order to figure out our gross profit. So that's just sales revenue minus total cost of sales, which is 151,356 minus 79,304, which results in 72,052. Now we also need to reduce our fixed cost, which is the selling and administrative overheads. Let's deduct that. So we were given the selling and administrative overheads above. Let's have a look. The total selling and administrative cost is 24,000. So we just deduct it from our income statement. That's 24,000. Now, if we deduct this fixed cost of selling and administrative overheads from the gross profit, we can easily figure out our profit for the month. So that's just going to be 72,052 minus 24,000, which is 48,052. Okay, so previously, if we followed the selling price from the first part of this question, we would have gotten the profit of 48,400. But after following the selling price from the second part of this question, we figured out our profit to be 48,052, which means that the profit was definitely higher if we followed the selling price that we figured out for the first part of this question. This concludes the third part. Now we can move to the fourth one. We need to advise the directors whether or not they should change the basis of allocation of overheads and the selling prices. We need to justify our answer. So obviously, if we take the level of activity into account, the value of production cost will be more realistic. Let's write it down. Value of production costs is more realistic after taking level of activity into account. Secondly, like I said before, if the prices of both products were changed for part B, then the profit would fall. If the prices of both products were changed for part B, then profit would fall. Similarly, if we take the level of activity into account, it will definitely get more costly and time consuming. Let's write it down as well. It is costly and time consuming to split overheads by activity. And if you're confused about whether to allocate the overheads and selling prices on what basis, then we could definitely do some market research and figure out what our competitors are doing. Let's write it down as well. The directors should undertake some market research and consider what competition are charging. Alright, based on these four factors, we now need to make a decision. I personally would advise the directors to not change the basis of allocation of resources, since the profit is still higher if we do not change the basis of allocation, and even though the profit is higher, there is not much change, right? So I would advise the directors that. Let's write it down clearly. So decision is the directors should not change the basis of allocation of resources. Alright, this concludes the fourth part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.